Hello there. Welcome back to Accounting Space. In this video, we want to look at the preparation of a statement of financial position, and we are also going to look at the notes to the statement of financial position. So we are going to look at a typical examination question from the previous question paper of November 2024. So going to our question, you see that this is our question 5 on you are appointed as an accountant of florist dealer. The business does not keep a proper accounting records during the year. You are required financial position 1 August 2021. Then will be a second part statement of changes, net profit or net loss. Then 5.3, note these three that we want to look at. That is according to this video. So we are going to, obviously, we have to take note that the statement of changes in equity comes as a note to the statement of financial position and also statement of financial position. So notes, remember, there are pre-calculations that need to be done before preparation of the statement of financial position. In other words, we are saying the figures that we calculate in the notes are used in the statement of the financial position. So basically, we have to start by opening the notes, and then after we have completed the notes, then we can proceed to go to the statement of financial position. So in this case, we're going to start on 5.2, then you go to 5.3, then you go back to prepare 5.1. So let's start by 5.2, whereby we go to our answer section. We see that this is our 5 point. Let's just try to see according to our 5.2. We have our 5.2 here, whereby we are having a statement of changes in equity for the year ended 31 August 2021. So the first figure that we have is balance at the beginning, which is 1 September 2020. And then we add or less comprehensive income or loss for the year. So we can start with the balance at the beginning. I will go back to the question. So the balance at the beginning is going to be our capital balance that we have there, which is 392,420. So we can just indicate that as we are having, and this is our balance at the beginning. So we're going to put this one as our balance at the beginning. We can just refer back, whereby we are saying 392,000, 392,400 rands. So this is what we have. Then how you add or less comprehensive income or loss for the year. But this is the one that we need to calculate here, which means we are not given in the question, and then we can leave it blank. Then we go to less drawings. So we go to the question and look for drawings at the end. Remember, we are calculating for the year ended on 31 August 2021. So we look for drawings that we have at the end of the year. So at the end is what we have in the additional information. So if you come here, you'll see that we have information about the owner with the group, 67,500 for personal use. So these are going to be our drawings. So you can just take 67,500 and put it here. And remember, we're saying less, so which means we are subtracting. And then balance at the end of the year. We check again if additional information is giving us the capital balance at the end. So you go additional information by additional information, so that you can be able to locate where adjustments are needs to be done. So in this case, in terms of capital, we are not given anything about capital as a balance at the end of the year. So in that case, again, it means this is also going to be, I'll quickly leave it blank again since we don't have it. So how are we going to calculate this figure for balance at the end? We will find it as a balanced figure in the statement of financial position. Remember, the total that we have for assets, the total for assets should be equal to the total that is set. So, and then you cannot be able to find this capital balance that is here as a balancing figure. You take that balance, you put it here. So if you put it here, you cannot be able to find the net loss for the year. This one. So basically, that's what we have. So that we cannot be able to. The second note that we have. The second note that we have is notes to property, plant, and equipment. So having done this now, we can be able to see the carrying value at the beginning, that is 01092020, that is at the beginning of the year. Then we have the cost price and accumulated depreciation, And then we can start with at the beginning. So we can start with the cost of vehicles at the beginning, and then machinery at the beginning, so that we can proceed to the second part of accumulated depreciation. So cost for vehicles, I will go back to the information given, try to check what cost for vehicles do we have at the beginning, but we are seeing that we are not having any costs that we have at the beginning, which means we don't have any cost for vehicles, any depreciation for vehicles. So we leave it, we go to the next part whereby we are having machinery. For machinery, uh, at the beginning, we are having cost being 29,400. So we take our cost as 29,400. Sorry, we can just put in the row for costs, whereby you're saying 29,400. Then we check for accumulated depreciation. We supposed to come here, we check again according to the information given. The accumulated depreciation on the machinery is 4,200. So we come here, we see that we've got 4,200. So we come here. Remember, to get our carrying value, we say cost minus accumulated depreciation of less year, means we are subtracting. So say 4,400 minus 4,200, then you get a net figure of 25,200. Right. So after having that now, we can now be able to proceed to what transpired in terms of the second part, where we have additions and disposal at carrying value, and then depreciation for the period. So we can start with vehicles in terms of additions and disposals and depreciation. So we come there, we check any additions in terms of vehicles. So if you come to point number 2, 2021, we bought a vehicle to the value of 162,000. So we have a vehicle of 162,000, which we need to put as an addition. So we come in. So we are saying additions, other vehicles, we've got 162,000. Then we check if you've anything about disposals, so we can just indicate it as new. But depreciation for the period, we can now be able to find it according to the rate that we are given on vehicles. We are told that take into account that on February 2021, we bought a vehicle to the value of 162,000 rands. The next sentence, depreciation at 15% per annum on gross carrying value must be written off. So this is a cost method. We are saying percentage times 162,000. So that's the first step of saying 62,000. And then we are saying that this vehicle came 1 February 2021, and our year is ending. Our year is ending 31 August 2021. 31 August 2021, and we are saying this one came 1 February. So we are saying the whole of February, March, April, May, June, July, August. So we have this vehicle was there for 7 months. So here we're supposed to multiply by 7 over 4. So it's simple as that. So we now calculate now the proportion of that depreciation. And we see that the answer that we are going to get is 14,000. 14,175. 14,175. So that's the depreciation that is going to come from depreciation for the year, which is here 14,175. So remember, we are supposed to show it as a negative. So the same cost that we have here is supposed to come again as the cost here, since that's the only vehicle that is there. And this becomes the accumulated depreciation, 14, because that's the only depreciation that we have there. So we subtract it at the end, which is going to be 147,000. 147,825. So that's what we have in the column of vehicles. Then we go to machinery. We need to check about the additions of machinery. We come here. We see that obviously we check in terms of the point that we have mentioned about this we need to do. So we come here, we see that in terms of machinery, we are not having any additions, no disposals, it's silent. So it means there's nothing. So if you come here, we indicate that there's nothing in terms of our additions. We don't have anything disposals, but we can now calculate depreciation for the year. So method is saying using the carry value method, which is the diminishing variance method. Remember, we say percent carry value is equals to costs minus accumulated depreciation. So start by calculating our carry value, whereby in this case, carry value is equals to costs. We've already calculated that in the notes, whereby we said our costs for 1,200, and then we got a carry value of 25,200. So we can now say percentage is 10%. So we are saying 10%, 10 over 100 times 25,200. And then obviously you are going to get it as 2,520. So this is our depreciation for the year for machinery. So we come here, we put our depreciation for the year as 2,520. So the cost at the end is just the same, 29,400, no additions, no disposal. So we are saying 29,400. Then accumulated depreciation, it's now this one that we have at the beginning, 4,200 plus the depreciation for the you get the accumulated. So we're saying 4,200 plus 2,520, and you get the accumulated at the end of 6,000. So the cost 29,400 minus 6,720, you get a carrying value of 22,680. So this is what we have. So we have a total column that we just need to add. We start with carrying value. The end we only have 25,200, so it's supposed to come here. So in this row, we only have 29,400, which is also automatically comes there. It's 29,400. Then here again, we have 4,200, which is also supposed to come here as a negative. Then 162,000 again, it's only one there, so it comes here. Then here with nothing. Then here we are saying 40,173,690, 695. And then we are showing it as a negative. Then at the end again, we add 147,825 plus 22,680. And the figure that we get is 170,505. And this is the figure of property, plant, and equipment. So here, and then we get 191,400. Then lastly, we got 40,175 plus 6,720, and we get 20,000 again. So so the figure that we are concerned with is the figure that we are going to transfer to the statement of financial position, which is this one. And it's going to go as the property, plant, and equipment. So we come in on our statement of financial position under the current assets. We are saying property, plant, and equipment. So we can try to out so that we create some space. So we are saying property, plant, and equipment. And on this one, which is 170,505. So the number of the note that we are taking from. So our note here, we are seeing that it's not numbered. So we can just maybe refer it as 5.3. So we come here, we maybe indicate it as 5.3. Is it numbered 5.3? That's where we got the information of property, plant, and equipment. So remember in some questions, it might be number, not number 2. So just write it 2. So that's what we have, and that's the only there is a financial asset. You also need to add to property, plant, and equipment to get the total for that current asset. So, but in this case, we can try to just use the one that we have. So it means if we are to close, we can close here. And this same figure that is going to come here as a representation of that current assets. Then we go to your current assets, whereby we check according to additional information. That's where we've got closing balances. So we can as well try to. So our additional information indicates our closing balances. So for inventory, you see that we have got inventory that we are given is 120,200, and we have 350. So we add the two to get the total for inventory. 120,200. So we come here, we say inventory whereby you spend 120,200, and we add 350. So if we add, we are going to get 120,550. 120,550. Then from there, we can check other balances of current assets, check for trade and other receivables. What is the initial information saying? We're given trade and other receivables here is 95,000. But remember, the net balance for trade and other receivables that we put here should be at the net balance after subtracting the level of the trade receivables. But we are saying we have got 95,000, but we need to subtract the net amount. So in other words, we are saying 5% is 0.05, and then multiply it by 95,000 to get the level of provision. Provision for payments for the period. We can as well try to calculate, calculate the So if you calculate, you're going to get it as 4,750. 4,750. So you can subtract it from 95,000 to get the net figure. So we say 95,000 minus 4,750. So we get the net figure, which is going to be 90,250. Right. So from there, we also check for the figure for any adjustment that can be done. Let's check for cash and cash equivalents. If we have it in terms of the money that is in the business, we are told that on the last point, we are told that the bank statement showed the debit balance of 2,100. So 2,100 is a negative balance. Since it's a debit balance of the bank statement, it will be a negative balance, negative here. And then which does not include the outstanding check for 3,650. So this is a further negative again. Remember, outstanding check is supposed to be debited on the bank statement. So it's a minus again. And outstanding deposit, a deposit is a plus, then we add 4,500. So we have negative 2,100, and then we have negative again 2,650, and then we have a positive 12,500. 650 plus 12,500. And we are going to see that the amounts that you are supposed to get there is 6,750. 6,750 is going to be your answer. So you come here. We are saying cash and cash equivalents. We have 6,750. Then from there, we can check if you've got any other current assets that we can use. So we go through to check if we've got anything that we can also as well try to include as our current assets, so that we have exhausted everything. Then from there, we are supposed to proceed and add to get the total for our current assets. So we add 120,550 plus 90,250 plus 6,750, and the total for current assets that you are supposed to get is what 270,550. 217,550. So this is what we have on current assets. So to get the total assets, we are supposed to say our non-current assets, and then we add our current assets. So we are saying 70,550, and then we are going to get your answer is 98,635. So this becomes the first balancing figure that we have. So we can close this one, because this is the first balancing figure. So we go down beneath there. Remember, we are trying to comply with the accounting equation, which says total assets is equals to equity, which is our owner's equity. We add our liabilities. So we have completed the first part of total assets. So we are now going to find the second total, which is of owner's equity plus our liabilities. So going down now, we are now on our capital. Remember, the capital figure, we don't have it according to this person. This is the same figure that we are looking for, that is supposed to come on this part as our capital, supposed to come here. This is the same figure that is supposed to be here as our capital. So we are going to leave it blank again. We'll come back to it as a balanced figure. Remember, we already have the total assets, which is automatically this figure that we have here is supposed to come here as total equity and liability. They are the same as indicated by this formula. Total assets equals owner equals plus liabilities. So this is our equity and liabilities, which is 98,635. So we can just put it there. 98,635. So we can now enter non-current liabilities. We go there according to our information given. So for our non-current liabilities, obviously we are going to look for the figure for loan. So we check there in additional information, what information do we have? We are told that a mortgage bond of 250,000 was obtained on 30 June 2018 from AK Bank. So we've got a mortgage bond that we have, which is coming in the form of our non-current liability, but the repayment is we are given the further point that we have there, that is the loan repayment for the year is 25,000. So obviously, to get the loan balance that is at the end of the period is going to be 250,000 minus 25,000. And we get 225,000. So we come here. We are now saying mortgage bonds. And we've found it is 225,000. So we say 225,000. And then this is the same figure that is going to apply as our total for non-current liabilities. So we can is what we'll try to. So we put the same figure as 225,000. So for current liabilities, we have to list them again beneath there, whereby we check again in the additional information what amount we have for current liabilities. Of course, we're going to start with trade and trade other payables according to given information. So we can go item by item, checking for those amounts. So the figure for trades and other payables, other current liabilities, 57,420, which is going to represent our trade payables. So you can just refer in your other section. You see that we put our trade payables here. The amount that we have is 57,420. And then if you go there, you see that we also have a trade in other payable that we have, which is on, can just check in terms of our rental for this point. The amount of 49,000 rands has been received from a tenant for rent. This includes the rent for September and October 2021. So remember our year is ending 31 August 2021, but we are having rent for September and October being also received. So we have received rent in advance. So remember, whenever if something is in advance, we have to remove the proportion that is in advance, because it won't be belonging for the current period. So, but we know that inside 49,000, we have 12 full months plus 2 extra months, which is September and October. So if you say 12 plus 2, you get your 40 months. So inside 49,000, we have 40 months. So we want to calculate the monthly amount. So you're going to say 49,000 divided by 40. 49,000 divided by 14. And you see that we are going to get your answer is 3,000. For 2 months extra that we received, it's not 3,500 times 2, which is going to give you 7,000. So it means this is another payable. Remember, this is income. Let us see this income. So when you say this is our income that we have. So obviously, when it's income and it's a prepayment of income, it becomes a current liability. You can take note of that. If it's a prepayment or an income in advance, it becomes a current liability. So we are going to put it. Remember, when it's in advance is when it's an expense, it's a prepayment. So the opposite is when it's an income. So when it's a prepayment, so when it's in advance, when it's income, it becomes a current liability. So we can just take note of that. So we are taking our total of 7,000 for the 2 extra months that we are received, which does not belong to the current period, as a current liability. So it's a part of other payables. So we can just say, we can just give a description in our answer section by saying, income received in advance. And we got 7,000. Then from there, we can now be able to find the total. The total for our current liabilities. If we add our 7,000 plus 57,420, you are going to get 64,420. So remember to get our total, which is second balancing figure, which we are having there. This one is our second balancing figure. In other words, we are saying if we say capital figure, which you don't have, plus non-current liabilities figure 225,000 plus 64,420, we get 98,635. So to get our capital, we are now saying 98,635 minus 64,420 minus 225,000. And then you get a balancing figure, which is supposed to be our capital, is we can just try to calculate and see what figure do we get from there. We can try to calculate according to the figures that we have. So we can try to make some corrections. Like assets for total assets, it's supposed to be 388. Same figure, which is supposed to come here, it's going to replace here, so we can easily correct there. So we are saying it's supposed to be 388,055 to find our balancing figure for capital by saying 388,055 minus 64,420 minus 225,000. Then we can now be able to get our figure for capital. So we can try to verify that calculation. So you are going to get your answer is 98,000. So the figure that is supposed to come here, 98,635. So this is our closing capital figure, which is, so this figure is the one that is supposed to come year end balance at the year end. So we can say 98,635. Then we can now be able to find this missing figure, 92,400. This which is going to be obviously net loss will be a negative, and then we less our drains, which is 60,500. Obviously, the figure that we are looking for is this figure, and it becomes 98,635 becomes negative. It becomes minus 392,400, and it becomes positive. It becomes plus 60,500. So we can now calculate it using the figure that we have to get the figure for our net loss. So if you calculate correctly, you are going to get a negative 200. So if it's 33,000, 200, then we can be. So we are saying 200, 33,000, 265. And we can put our brackets to show that it was a net loss. So rate minus 233,265 minus 60,500 to get your 998,635. So remember we can just remove this sign of money, and then we are left with 392,400. So this is the final calculation that we have according to the missing figure of that we are looking for net loss. And hopefully the video was helpful. Thank you for listening. Let's meet again in the next video. As for this video, I'm signing out.